Okay, some persons have asked me, hey, how do I learn, how do I get entries for HFX? How do I learn how to trade? So what we're going to be learning today is charting. We're going to be learning how to chart your uh, your trading charts, all right? We're going to be learning that, and then we're going to be learning how to take good entries on Hourglass. We're going to learn how to take good entries on Hourglass. That'll be the scope of today's training, all right? I have other trainings in mind, such as how to use Simple Scalper and Web Slinger, right? For those of you who don't have Hourglass, you have an option of using Web Slinger or Hourglass, or Simple Scalper, okay? So today, strictly chatting and trading with Hourglass. So to take up the first session, I will have none other than the amazing and wonderful Coach Ashla. She'll be taking on the first session of chatting. All right. I want you to drop some fire on the chat box for Coach Ashla. Drop some fire before she comes in. Drop some fire. Which website do you use for your demo? Your broker should have a demo account, okay? So just chat to your broker and tell them you want a demo account, and they will send you a username and password for a demo account, all right? Yeah, I can see the beautiful fire, the beautiful fire. Coach Ashla, if this fire is enough for you, you can go on and take it up from here, share your screen, and take it away.
Amazing. Good evening, everyone. Good evening, fabulous wealth makers, dominant wealth makers, incredible wealth makers, intelligent wealth makers. You know what? You guys are just simply amazing. For choosing this opportunity, guys. It was not by mistake. And all I just want to say to you guys is that you have tapped into a skill set that requires you, to be focused, that requires you to be dedicated, that requires you to have passion for learning. And the reason why you are here this evening tonight is because of your passion for learning and not just becoming a lethal signal taker. The one thing that you need to basically tell yourself is that I am in this academy to basically acquire a skill, help people to acquire the very same skill and make money when I'm expanding the opportunity to different communities. So guys, tonight is going to be absolutely mind-blowing. I think the biggest challenge that I faced, the biggest challenge that most people are facing when it comes to trading HFX is basically determining the entry levels, all right? So unfortunately, I won't be able to share my screen because where I am, it's a little bit dark. I'm having issues with my light bulb, so I'm not even going to bother sharing my screen. I'm just hoping that possibly next time I will be able to. All right, so I'm going to share. I think I meant to say sharing my video, not sharing my screen. Sorry. Okay, so tonight basically we're just going to do a very nice, nice simple exercise. All right. This strategy, you don't take it away from the double blessing strategy. Okay. Chatting, you need to make sure that when you are doing your chatting and before you're taking a trade, you still do your confirmations. You need to have at least about 4 to 5 good confirmations before you can basically take that trade. You still need to check your news. You still need to check your currency strength meter. You still need to check your RSI. You still need to check your stochastic. You need to check your EMA line. You need to make sure that whatever trade that you are taking, you're not trading against the market, but you are trading with the market trend. All right. You need to look out for your arrow. You need to use a cash trap. You need to check your score point in order for you to make sure that you'll be taking that good trade. The one thing that I want you guys to note is that you must always know that the best time for you to enter the market is at a level where most traders are also waiting to enter. You don't want to find yourself just floating alone in the market, taking a trade, and you are just amongst the few immature traders that are starting to learn how to trade. And then you basically get trapped by the market, and the market basically charges you money. You don't want to find yourself in that situation. You want to find yourself where you are waiting in positions where most of the buyers are waiting, most of the sellers are waiting, most of the skilled traders are waiting. In that way, you know that if you can identify your strongest resistance zone, your strongest support zone, because of they are strong, there is no way that the market will not bounce in those areas. This is how you are basically able to get your boilstone trades. This is how you are able to actually enter a trade and not have a heart attack, you know, because by actually learning the right way of trading, it builds your confidence. You know, you can even look at the market and say, nah, this thing is not ready, I'm not coming. You know, people that don't understand their entry levels, people that don't understand charting, people that don't understand the support and resistance, they just find themselves just diving in. It's like they are doing a we die situation. And when you are doing a we die situation, guess what? You are going to die. Okay, because you're just diving in, you're just throwing yourself into the market. But unfortunately, when I went through the session with Coach Sophia, I mean, she saw that I'm struggling, and she saw my passion for learning. A lot of days I would be camping on Go Live, I would be watching videos. And the one thing about my personality is that I'm curious. I would be checking the videos on Forex, I'll be learning on Forex, I'll be learning, you know, from different educators, from different products, you know, because at the end of the day, trading is just trading, all right? The more that I allow myself to expand on the knowledge, and when I look at the market and I can identify certain things that I learned from different educators, it basically gives me a better understanding, and for me to know what exactly is going to play out if the market is positioned in this manner. So just to cut the long story short, this is just going to be very sweet, very straightforward. And guys, please, you cannot leave the session and not understand charting. All right. Just take it that this is your only opportunity. Okay, this is your only opportunity that you actually are going to use in becoming a successful trader. Now, this is the one, you know, opportunity that once you have learned, I promise you, we're gonna have a lot of people from wealth makers that are going to go 5 figures, 6 figures, 7 figure, just because of their understanding charting. All right. So the number one thing we do, guys, is that we basically go through the news. We want to check, okay, fine, what are the currency pairs to look out for? Are there any news? We're looking out for the gray folders, the red folders, the yellow folders. So the gray folders, as you know, it's high impact news. It indicates that it is a bank holiday. Personally, whenever I see a gray folder, and especially when it is on USD, I know that, you know, we have our educators in the team that have gotten so skilled, and they just know how to maneuver themselves around, you know, the trades, especially when it is a USD bank holiday. But USD is a very strong currency. It's a major currency, and it affects majority of the currency pairs, you know, in the market. And when it is on bank holiday, personally, especially if you are a newbie, just stay out of the market and don't trade, because the market is very volatile. You can't, you know, you'll do your charting, you know, you'll check your confirmations, everything will align, but the market will take long to perform into your direction, because for some reason on that particular day, it is just misbehaving. Okay, and then the second folder to look out for is the red folder. With the red folder as well, it basically indicates high impact news. All right, so you check the time, you make sure that the time that you're checking is in your time zone. My time zone is not the same as yours. I am an hour ahead of Team Nigeria. Okay, so obviously I'm in my time zone, I'm checking, okay, fine. Red folder, what time is it? Okay, fine. There are no news on any currency pairs currently at the current moment. And then the orange folder, less impact. Let me just say moderate, you know, impact, medium. Okay. And then the yellow folder, basically, it's less low impact. Okay. And then the second stop is the currency pairs. Personally, especially when you're going to start learning to trade on your own, and you're going to start, applying the strategies and everything, I would always recommend that people must use, or rather go for currency pairs that, number one, the first currency is very strong, okay? And then the second currency pair is extremely weak. So what I mean is that the first currency should have at least, I'll prefer to go with a full bar, all right, meaning that, for example, a full bar, I'm referring to CAD, for example, and then a very, very weak currency pair, I would, refer to JPY or CHF. If you are a new trader and you're learning how to trade on your own, avoid trading currency pairs that are too close together, like your GBP USD. The difference between the two currency pairs is just only one bar. So it means that in that type of combination, the market is consolidating and the currency can basically flip on you at any time. And the worst thing that you would ever do to yourself is for you to sabotage your confidence, because what you're trying to do is that you are learning what the educators have taught you, what the academy has taught you, and basically you are applying. So what you are basically looking out for is you're basically looking out for results. You want to see that what I've learned, is it yielding results? Is it giving me the type of result that I'm looking for? So you don't want to find yourself self-sabotaging confidence by going after currency pairs that are too close together. And can you just kindly make sure that your mics are muted? Okay, awesome. So once then you have done that, all right, then we go to our hourglass, all right? It is very important, guys, to make sure that we are using the company products. If you are not using the company products, you are scamming yourself. No one else is scamming yourself. It's like you are literally paying for school fees for a university fee, and you thinking that you are too smart, you are going to lecture yourself, you're going to teach yourself, but then you are paying for school fees and the university has made provision for the lecturers, the resources, the books and everything, but you just decide, no, I'm not going to attend the classes, I'm not going to listen to the lecturers, I'm not going to basically use the resources that the university is providing. I think I'm just going to go to the internet and teach myself. It's the same thing. If you don't want to teach yourself the academy resources, you are scamming yourself. All right, because there is power in the academy resources. Remember that everything that is helping us, to learn how to trade and to basically, advance our skills, these are resources that are coming from people that have taken years in acquiring the skill, that have taken a lot of, technology and just a lot of work in compiling strategies and making sure that, they're basically making this whole trading journey much easy for everyone. So we don't have to go through, the 10-year struggle that they went through in learning how to trade, but they have shortened everything out, okay, through their experience. They basically have shortened it out by creating all these amazing strategies that we are getting from the academy. So guys, please use the resources, use your HFX swipes, watch the videos, guys, go through different educators and learn. Don't box yourself, don't only box yourself from just learning cash trap. There are amazing other strategies that you can learn. And again, you might find out that what is going to take you to 7-figure might not even be cash trap. What's going to take you to 7-figure might be the simple scalper strategy, which is the reason why Coach Tony has just said that I'm going to, introduce another educator again during the course of the week that's going to share with us how basically they were able to overturn their account by just using the simple scalper strategy. Maybe someone that is on this call is basically needing or in need of the strategy for them to basically overturn their account. So guys, this is how basically I learned charting. Number one, I'd like to give this credit to my amazing coach, Coach Sophia. She has been amazing. She is selfless and, very available to help people even when there is no direct benefit. I mean, we are in the same team, but I am not directly under her. But then when she saw my passion and when she saw my frustration at the same time, she was like, Ash, come on Zoom, let me show you something. And when she showed me this charting, way, or rather strategy, or just, you know, helping me to identify entry points, because that's the biggest struggle. Even though I can see that, okay, fine, this is a 4-pointer score trade, but you know what can happen? What can happen is that I can like, oh, okay, I'm seeing this, I enter the market. And at that time, the market will still continue going up, but it's a 4-point trade, it's a 5-point trade, it's a 6-point trade, you know, and I'm just diving in, right? And when I dive in, the market still continues shooting up and I lose money. Now, that was my most frustrating thing. I'm like, but then what is this cash trap? So why do I have a 4-point, a 5-point, or a 6-point, but my trade is not actually in the direction that cash trap is communicating? All right. So this is simple, very short, very straightforward. Be attentive. Don't be confused. All right. Don't allow yourself to be confused. Okay. What you do when you start charting and you look for entry points. Number one, you will chart your daily, you will chart your hourly, you will chart your 15 minutes. All right. So those time frames, when you chart them, they are going to help you in identifying your entry points. Okay. So those are, it will give you zones that a lot of sellers and buyers are actually going to be waiting along with you, and you know, points where a lot of support, a lot of traders are waiting, and when you enter that market, it's going to bounce in your direction. So now let me show you how you basically will chart. Okay, we need to pick a currency pair. Number one, I've mentioned that I prefer to go with the very strongest and the very weakest. I don't know, guys, what are you recommending in this case? Euro, JPY? Is there a combination between CAD, CHF and CAD, JPY? I don't know if there is such a combination. I think there is CAD, CHF, right? Yeah, there is. Okay, awesome. All right, so we basically are going to choose CAD, CHF. CAD is stronger than CHF, so basically we are looking for a buy. Okay, the EMA line is moving below the candlesticks. All right. Before we can go and check our stochastic and RSI, which is what Coach Tony will expand more on that, because I just love the way he just explains it. I'm just going to show the charting part. So once I have picked my currency pair, okay, so now I'm going to start on the daily. Now, this is what you need to realize, okay? So when you are on the daily, all right, open up your chart, make sure that you open it up. Don't be afraid in zooming in your chart, because you want to make sure that when you're going to put in your lines, you are going to place your lines exactly where the wicks are. Okay, so I like to open up my chart because I don't want to play with my money. Okay, so my chart is nicely widened up. So what you do on the daily, right? On the daily, you are going to chart the previous candlestick. Okay, and because of you are looking for a buy, what you're going to do is that only on the daily candlestick, all right, you are going to just only chart the bottom wick. Okay, as you can see, it's right at the tip of the wick. Make sure that your lines are, you know, right where they're supposed to be. They're not floating, they're not somewhere, they are not moving across before the tip of the wick. It's right at the tip of the wick. Okay, so because it is a buy, I'll obviously mark the bottom of the previous candlestick, the wick, and the bottom body of the wick. Okay, hang on. Try and nicely move it. How do I move this box? Okay, I'm gonna try again. I think it's nicely placed. Okay, yeah, it is. So my second horizontal line, I basically will place it at the bottom body of the previous daily candlestick. I don't mark the current daily candlestick because it's the current, it's today. I don't do that. I just only mark the body and the wick. And the reason why I have marked only the bottom and not the up, it is because of I am looking for a buy order. So when I'm looking for a buy order, I enter at the bottom, all right, and then I sell at the top, all right. If we were selling, if the market was trending down, if we were selling on the daily candlestick, I will mark the tip of the previous daily candlestick at the top, and I will also mark the body of the previous daily candlestick at the top, all right? And I'll leave the bottom out because it is a sell order. So in this case, it's a buy order. I'm only going to do it at the bottom, all right? Then what I do, and take note of the color, all right? You can use whatever colors that you want, but also take note of the color. It's going to help you. So on the daily, I prefer to use blue. And then I'm going to then bring down my chart to 1 hour. When I bring down my chart to 1 hour, my candlesticks are still nicely visible. I can even see the wicks, perfect. So I go and I fetch my horizontal lines again. Now what I do, on this one, I prefer to use this yellow or goldish color, whichever color you choose, it's fine. So what I will do in this particular instance, let me move this a bit far. Okay. So what I will do here on the hourly, I will basically chart the tip of the previous candlestick. You can see the current one, it's still, it's forming, right? Because right now it's exactly 11 on the dot. So take note of that. So I will basically chart the tip and I'll chart the body, okay, of the previous hourly candlestick. I do it at the bottom and I do it at the top. It is only on the daily that I only do it on one side, but on the hourly and the 15 minutes, I will do it both sides. I think this should be the correct tip. Okay, so the daily is in blue, the hourly is in yellow or gold, and then I go to the 15 minutes. Okay, so on the 15 minutes, I go to my horizontal lines again. I change my color. The reason why I'm using different colors is so that when I go onto my 5 hour, okay, I can be able to see, okay, fine, the market is reaching my hourly support or my hourly resistance, my 15-minute support or my 15-minute resistance zone, all right? And then I'm basically able to see where I enter. Okay, so on the 15-minute, okay, let me just try and widen this because you can see that the wicks are very small. They might be small, but they're very important. So I place my horizontal line. Can you try and move it up a bit? Exactly at the tip of the previous candlestick, okay? And even though the wick and the body are very close, I don't take it for granted. I still chart it, okay? I take my horizontal line again. Already the body of the 15-minute previous candlestick has been marked by the hourly, and already the wick of the previous 15-minute candlestick has also been charted by the hourly, so I don't have to, so I can just delete it, okay? Also an indication that those particular zones are very strong resistance and support zones. So once I've done this, guys, okay, I've got my end. So basically what charting basically says that it helps you to look for your entry zones, like your entry prices, because sometimes you'll be watching Kendry Mo and Kendry Mo will be calling out an entry price, and then you enter the market and then Kendry Mo will say, okay, guys, this was a bullstone trade, but then this market is going to go down again. And if it bounces at this particular price, take another trade. And you're asking yourself, how confident are you? How do you know that it's going to come back and bounce at this particular area and continue shooting up? This is how they know, okay? They know this information through charting. They know, okay, fine, they've, drawn their lines. And then when you go to your 5 minute, this is how basically it'll look like. One of the other experiences that I've had an experience where I can even trade a consolidating market through charting. I can even trade I'm no longer afraid of trading a consolidating market. Like if let's say the price is consolidating, I can trade it. So now what you are currently seeing right now, okay? So you can see that, okay, fine, this blue candlestick right here, okay? It formed basically, and then it reached here, it bounced, it went, basically it closed here. Okay, it went down and it closed here. All right. And then the red candlestick also, it formulated, all right. And then when it formed, okay, it came here to this specific, support, which is the 638. It came at the 638, it bounced at the 638. Okay, and the candlestick basically closed. All right. And then we had a candlestick that basically opened. So say, for example, if let's say you were just waiting for this red candlestick over here to basically close, where did it close? It closed at the 638, right? This is where it closed. So it means that if I then want to enter because it's an uptrend, the market is going up, all right? I know that I already have my zone. I will enter at the 638 for a buy. It did a slight retracement, okay, but it went up, okay? So that was like a boilstone trade, all right? Now we're just going to watch this one play out, okay? So the candlestick opened and it's basically kind of rejecting there at 681, all right? It's rejecting. It might slightly push through because remember, no one owns the market and the market sometimes behave in its way to basically trap those that did a we die situation with poor analysis. So it'll just trap those and then it'll still respect the zone and it'll still continue moving up. So it's still flat. I think now if the price is not moving on the broker, then it should be flatlining. All right. But it's like 2 pips away. If you can see, it's like 2 pips away. Okay. Because our horizontal line is giving us a price of 681. And where the market is, it's currently at, okay. So it's now at 681. Do you see? It rejected. Okay. It went through. It's moving up. It's moving up, honey. And if you had taken a 2-minute trade, you'll be clearing. So it's you use your own discretion and according to your own practice and experience, what for how many minutes would you like to take a trade? Do you want to take a trade for 2 minutes, for 3 minutes? I'm good with 2 minutes. With this specific strategy, I'm good with 2 minutes. And a lot of times I don't even have to roll over. Okay. But look at that. What? Like, this strategy is super amazing. I wish I could be shouting right now, but there are people sleeping in my house. Hey, massive profit. I don't know who took the trade, but I know that, they are we die people on the Zoom call. Is there anyone that took the trade? Is there anyone that took the trade? Because that's like massive profit. So this, guys, it builds your confidence. It gives you peace of mind. Do you understand? It gives you peace of mind. Even if the market might just, play around with your emotions or whatever, and, sometimes you'd hear Coach Matthew will say, no, guys, take one roll over. And you're thinking to yourself, where is this guy getting this confidence of telling me to take the roll over? do I not just abandon this trade once, you know? But he's getting that confidence of telling you that, guys, take a roll over. Why? Because he understands the market is just playing around, okay? And in just a minute or two, if you take a roll over, someone cleared, do you understand? So in just a minute or two, he knows that it will reject, it will respect his analysis, and it will go in the right direction. Do you understand? So what you're seeing right now on the chart is that even though it's kind of playing around, it's kind of, you know, turning blue, turning red, but if you had entered at 681, even if you had taken a 3-minute trade, you still would have cleared. Okay, you still would have cleared. So there are instances, guys, where you will get the market. There are instances like, for example, right, this candlestick is it's forming red. It's kind of like moving down. So there are instances where, okay, the candlestick basically will form red, and then the market will start selling, and it will be moving down. All right, it will be just, you know, it's retracing. Okay, because as you all know that the market does not always move in a straight line. Okay, so when the market is moving down, don't take trades that are somewhere in between here. All right, because those are not the areas that we have marked as our entry points. So when you see the market moving down like that, just observe and watch the market to see exactly what is it playing at. Is it playing at, you know, moving down? Okay, and once it does this, and already you've done your charting, you now say that, okay, fine, it's gonna retrace, it's going to move down, and it's going to go all the way to the price of 638. And once it reaches that 638, it's gonna respect it. Okay, and even if it does not respect it exactly, all right, because you can see that there are closer zones to the 638 because you've got 629 and 627. So what can possibly happen in this instance? It might not necessarily bounce at the 638. It might also want to test also the 629. All right. So can you kindly guys keep your mics muted? Please keep your mics muted. Coach, please help me to mute the other people. All right, awesome. Okay, so what you basically do is that, you know, sometimes when you hear the educator saying that, okay, fine, we are going to enter, we're going to wait for the market to come to our zone. Our next entry point will be 638 and below, right? So your belows could be your 629 and your 627. And especially if the lines are like, you know, that close, what you will do is that just try to exercise a little bit of patience. Don't just go immediately on the 638. Okay, it might just want to push down and test that 629 or 627, and then create a wick and continue shooting up. So in this type of instance, maybe that would be a trade that you want to take for 3 minutes. All right, that would be a trade that you want to take for 3 minutes. But look at what is happening on the chart. All right, so the other candlestick basically opened, and it respected again the 681, and it's a boy stone. Do you understand? It respected. So if you are using proper risk management, and let me tell you, don't let this cloud your judgment. Don't let this make you to be too overly confident. All right, because now you start, okay, fine, no, I know that, okay, fine, the market, if it comes here, it's going to respect my zone. You go in with half of your account, you know. So, and then, because remember, no one owns the market, and something might just happen, you know, something might just happen. And when you now start over leveraging, and it starts, you know, retracing, and the market is reversing, and now you're like, oh my God, this thing is not working. Or no, you need to still exercise discipline. You still need to check your stochastic. You still need to check your RSI. So what I'm explaining, my part of the training is just purely on the charting. All right. Then I'm going to hand it over to my coach. Just refresh. Oh, okay. So I'm going to hand it over very soon. I'm going to hand over this part of the training to my coach. Then he's basically going to join everything with the other confirmations. Okay. Your stochastic, your RSI. All right. So we can already see, guys, that, the RSI is already above the red line. So meaning that this market is going to continue to buy. It's going to continue to buy. Heavily so. Anyway, this is awesome. Coach Tony, I don't know. Before we can hand it over to Coach Tony, guys, do you guys understand this charting? Is there anyone that does not understand what I've said? I've got a tendency of speaking too fast. So if you don't understand, if somehow you're a little bit lost, we do understand. Ebuka, okay, awesome. Repeat RSI, okay. The RSI and the stochastic will be done by Coach Tony, but I want to understand, do you understand the charting? Charting just made wonderfully. Hey, we are going to enjoy HFX. You are going to enjoy HFX. Like, you are going to be milking this, like milking it so sweet. Yes, I'm understanding. Is it Karimot? What is it that you don't understand? Could you repeat the charting briefly, please? Okay, understanding. I don't understand it clearly, ma'am. Okay, I'm going to do it one more time. And then, oh, Kiramot is new, okay? If you can, please repeat it. Okay, I'm going to repeat it one more time, right? And then I'm going to ask who understands. But is there anyone that took any of the trades that were happening right now on this chart? Is there anyone that went into the market again? This is sweet. Oh, this is wonderful. Absolutely wonderful. All right, so let me start again. So if you want to delete your lines, guys, you basically will come here at the bottom left. There's a bin. You basically click on that bin and it'll basically delete all the lines. Okay.
Coach Ashla. Why don't you do hands-on training with the person?
Okay,
like,
no problem. What I was thinking, what I was thinking is I was going to explain and then ask again, and if there's anyone that doesn't understand, then I'm going to ask them to share their screen.
All right,
but if you do it now, I can.
Fine. Go again.
Okay, let me go again.
All right.
Then we'll do a one-on-one example. So can you use another pair to explain, please? Hey, this one is taking trades. Okay. All right. So what I said, number one, is that, okay, number one, you always check the news. Okay, I've explained that part. Number two, you check your currency strength meter. It is extremely important. What I prefer to do, okay, I'm going to go with, can you guys give me a currency combination from the screen? CAD CHF was very good. USD JPY, no. USD JPY is like 3 bars. JPY is 2 bars. Hey, I'm not coming. Unless if unless if that trade is called by Coach Tony, then I can confidently take it, or Coach Emmanuel. But myself, trading with my money, my own analysis and my own knowledge, no, I'm not coming. Euro JPY, maybe we can try Euro JPY. Yeah, we can try Euro JPY. And let's see. But I mostly, I like the full bar and the very weak. So always, if we can find a combination between the full bar and the very weak combination, perfect. But let's try Euro JPY. Okay. But there was news on JPY is on bank holiday today. But anyway, let's try. Okay, so we go on to Cash Trap. and then we look for Euro JPY. Okay. All right. So on Euro JPY, what's the trend? It's a buy because Euro is stronger than JPY. It's a buy. Okay. So I go onto my daily. This is where I start. I start on the daily. Let me just refresh a moment. Euro JPY. Okay, so you start on the daily. All right. And then we basically are looking for a buy. All right. So don't be afraid of opening up your chart. Okay. Open up your chart. Open it up so that you can see the wicks of the candlesticks. Okay. And how you can also do that on the pricing on the right hand side where you see your prices, right? You just basically widen that part up. Just widen it. Just widen it. Okay. Whether you're using your phone or whether you're using your laptop, just widen it. Just make sure that your wicks and the body of your candlesticks are very visible. Okay, because if you don't widen it up and you're thinking that you're doing fast, well, you're cheating yourself again because of you're going to get incorrect entry zones. All right, so since it is a buy order, so what did I say about a buy order? What did I say about a buy order? Can someone respond in the chat box? What did I say about a buy order and charting on the daily? Okay, mark the blue. Yes, no. Chart only the bottom. Yes, mark the floor. Okay, good. We're marking the floor. So I'm marking the wick of the previous daily candlestick. Is this even the previous? It's not. It's not because we're having a candlestick opening here. So this blue one will actually be the previous, the immediate previous. Okay. I want to see that wick clearly. Okay. All right. So I've marked the wick and now I'm marking the body. All right. I'm marking the bottom because it is a buy order. All right. And then I change my time frame. I go to 1 hour and I open it up because I want to see clearly, because I love my money and I want to build my confidence. I don't want to sabotage myself. Okay. So my wicks are very clear. Then I fetch my horizontal lines. I change the color. Preferably, I like to use yellow or gold, whichever one. All right. So I basically drag this horizontal line. I mark the wick of the previous, okay, candlestick. I fetch the horizontal line again, and then I chart the body. I fetch the horizontal line again. I do the same thing that I did at the bottom. I do it at the top, okay. I chart the body, okay, and then I also chart the wick. Awesome, of the previous candlestick, okay. Now on the hourly, then I move on the 15-minute. On the 15-minute, let me see, can I see clearly? Almost. I'm opening it up. And when I open it up, I see a very tiny wick over there. And that wick is very important. So I zoom it in again. Zoom it in.
Slow down a bit, please. Some people are saying that. Some people are saying you're too fast. Just slow down a bit. Thank you.
No problem. Okay. So, perfect. Now I use a different color. Oh my goodness. Pardon me, guys. I used to work in a call center, so so yeah. You know, when you're talking to customers and you're trying to sell a deal, Okay, when you zoom it up, you can see that it's not really entirely on the body. So I try and I place it exactly on the body of the previous candlestick. Okay, and then I place it on the wick, the tiny wick, awesome. And then I mark the body here. I want to see something, right? I'm thinking possibly this red and yellow line, this yellow and green line. Sometimes when I see that they're just too close, I go back to my 1 hour and you might find out that I didn't place it correctly. You see, it's floating. It's not exactly where it's supposed to be. It's floating. So once I see that, it's kind of indicating to me that, okay, fine. Why are they just so close? Maybe I did not do it right. So I'm going to delete this green line here. And then I'm going to move this yellow line exactly on the body. And then the wick, I'm going to move it there. Okay. Let me see. I don't know why I did this, but yeah. Okay, on the wick. I'm in the body and then move it exactly. It must be exactly on the body and on the wick. Okay. So we're done with the 1 hour. I go back to the 15 minutes, right? And then on the 15 minutes, okay, already the body and the wick of the previous candlestick is properly marked, okay? And you can also see here that I was right. That yellow resistant line on the hourly is also on the 15-minute candlestick, all right? And even the wick is also on the, okay, no, the wick is here. It's actually this candlestick here. So I just take the green line, horizontal line. This thing is annoying. Let me just try and move it again. Okay. There we go. All right. So the green is the 15 minutes, the yellow is the 1 hour, the blue is the daily. And if at any time that I did my charting on the hourly and I go on the 15 minutes and the hourly is also playing out on the 15 minutes, I don't have to mark it again because I've marked it on the hourly and it's still the same thing on the 15 minutes. So I just leave it out. Okay. So now what I will do, I'm done with my charting and then I can just, bring back the candlesticks so that I can nicely see them. Okay, because I'm done with my charting and I will then go to my 5 minutes. Okay, because I'm taking my trades on my 5 minutes. Okay, so when I'm on the 5 minute, right, I can just slightly open it up for people to see. How do I take this down? Okay, I think this is better. Okay. So basically the lines that we have drawn, the yellow and the green lines, those are our entry prices. Okay, those are our entry prices. So what you see here is that in this particular case, we have this green line here, which should be our support. Okay, it looks like the market is trying to basically break through that support. All right. In this particular instance, Coach Tony will correct me. I don't take that trade. Okay. The only time that I will take that trade is I'm going to wait for this candlestick to basically break through this green area here, this green line that I've just marked, which is the 512. Okay, so the 512 and the 513 are very close. So I'm going to wait for the market to break through that. All right. And if it can break through, what I know the market will do, once it can break through, it will continue shooting up. All right. But what it will do is that it will bounce, it will retrace. And when it retraces, it will retrace and still come back on that very same area, which is 513 or 512. It will bounce. And when it retraces and bounces on that strong support area, I do a entry. So I will enter the retracement because I know that already the market has broken through that support and it's now ready to continue on an uptrend. But once it has, I wait for it to break. I don't take any trades in this particular moment. Okay, so it'll break. All right, you see it managed to break. Okay, and normally I would like to take it maybe on the next forming candlestick. All right, so you can see it broke through that green line. It's kind of doing a retracement. It's going down. Okay, so what I will do is that I will wait for it to get to 513 again or 512. When you see it like that and you can see it has broken through your green line, don't let the market persuade you. Don't let the market call you and say, I'm already above the green line and I've done a slight retracement. Enter the trade. I will continue shooting up. Don't allow the market to do that to you. Okay? So wait for the market to come to you. In this instance, what did it do? It came to you. All right? It came to you. So you've entered the trade. So you've entered at 513 and 512. All right? You see it's still laying there on that support and it's very strong. So we're gonna watch it, we're gonna watch how it's gonna play out, but it's going to go up. Okay, it's going to go up. So this is basically how you determine at what price are you going to enter the market. So when you draw out your support and your resistance lines, I mean, this is what basically going to build your confidence to say, I'm entering this trade. I'm going to wait for the market to come to me, to come to this price. If the market comes to this price, I know this is where a lot of buyers, and this is where I say to you guys, choose a currency pair that is extremely strong versus a currency pair that is extremely weak. Okay, because when you do that and when the market is playing out like this, your confidence is like, no man, euro is stronger than JPY. So even if it can be a little bit hesitant and it can just, not move right now, but look at what's happening. When you go for a very strong currency versus a very weak currency, that's how you basically are going to win your trades. So that was a winning trade. If you had entered the market at 513 or 512 and taken a 2-minute trade, now you would have cleared. Now you would have cleared. Okay. It's doing its slight retracements. All right. But if you had entered at that price, 2 minutes, 3 minutes, you are out. Any questions, guys? Any questions? Now, I want to just add quickly, right? So, for example, with this specific trade, now, if let's say this candlestick basically closes on a red, and then the next candlestick basically opens below the 512, you know what's going to happen? You wait for the market at the 461. So you've taken your 2-minute trade above, You've taken your profit. Okay. Now you don't go in here. You don't enter a trade here. You don't take it where the market is for a buy. All right. Thinking that it's basically going for the lowest price and then it's going to continue shooting up. You don't do that because this is where the market can trap you. All right. So when it does this, you've got your entry prices, you've drawn your support and your resistant lines. Those are your entry prices. So stick to your game. All right. Even if it might just do that spike and then it continue moving up, right? But stick to your game. Don't let the market change your game. Don't let your market change your plan. All right. Because if the next candlestick can open and it opens below the 512, then it's going to go down. It's going to do a retracement, okay? And you wait for the market at 461. You know that, okay, if the market goes down, this area, this open gap here, whatever happens there, you're not taking any trades. This is you watching the market and seeing, is it going to go down to 461 and then bounce, continue going up? Or is it just doing a rejection, all right, and then continue shooting up? Why do you chart with the previous candlestick? Can you use like the previous 2 or 3 candlesticks? All right. The reason why we're charting with the previous candlesticks is for us to basically get the strongest areas, the strongest entry areas. If you're using the past 3 or 4 or 5, the market has already played out, because remember that what we're doing is that we're charting the daily, the 1 hour, and then the 15-minute. So if we are using the previous 3 or 4 or 5 candlesticks, that's about like 4 hours ago. That's like 30 minutes ago or 45 minutes ago. Stick to the plan. Stick to the plan. So we want to see the market. The market is, even though the market will retrace, old prices, but the market at the end of the day, it's moving forward. So you don't want to complicate your analysis by drawing too many lines, because when you now start drawing too many lines and you're considering too many candlesticks, it's going to confuse you, because now you wouldn't know which one to respect. You wouldn't know which one to go for. And when you start doing that, at every time that the market reaches a certain line that you would have drawn, because you have so many lines on your chart, you are always entering, you'll be losing money. So you don't want to find yourself where you are allowing the market to destroy your confidence. You want to learn and get a strategy that's going to boost your confidence, that's going to give you even more confidence for you to enter the market. See what's happening, guys. Amazing. See what is happening. So that candlestick, basically, it closed above the green line. It closed above. It did not close below. So it's moving up. All right. It did a slight retracement there. Okay. And then it went to your price. It went to your 513 and your 512. You re-enter. You are in massive profit. Simple. You said for a buy, we only chart the bottom daily candlestick, correct? So for a sell, we chart the top of the previous daily, correct? Yes, that is correct, Gold Digger. That is correct. All right. So you'll be literally digging gold here, huh, Mr. Gold Digger? You'll be literally digging, because now you know your entry prices. Charting is very important, guys. Otherwise, if you don't know charting, and you know only your stochastic, your RSI, and everything, hey, I'm telling you, you'll be screaming away every second. How do you determine entry price? This is what I've just done. This is how you determine entry price, by charting your daily, your hourly, and your 15-minute candlesticks, the previous candlesticks. So these lines determine your entry price. If you don't know how to draw these lines, then you will not be able to know how to determine your entry price. Got it. Thank you. Awesome. So should we enter trade strictly at that zone? Yeah. You know, you don't want to find yourself just diving in. Do you want to do it, die, you die. If you do it with die, we die, the market will die with your money. It'll die with your money. Anyone that does not understand what I've just explained right now, because I need to hand over to Coach Tony, so he can basically put the cherry on top, which is adding what I've just shown you with the confirmations. Is there anyone that does not understand still? Please don't be shy. We're doing this for you. And if you don't understand, we're going to try a level best to make sure that you understand the candlesticks entry price are not the same on TradingView. Yes, they are not the same on TradingView because the broker that's been used on Cash Trap and the one on TradingView are a few pips different, like 2 or 3, even up to 7, I think, at times, depending on which broker you're using thingy using on TradingView. When you're charting on TradingView, always make sure that you go with O-ender. I don't know if I'm pronouncing it right. TradingView. So whenever you are charting on TradingView, and you will see if, let's say, you're selecting a currency pair. Let me show you. Let me just do a practical example. Like, for example, okay, this is TradingView, right? So let's say I am looking for but I already said mine, I think, right? Odd JPY. So let's say, okay, fine. You can see if, let's say, you're searching for odd JPY, it shows you all the different sources. Okay, it shows you the FXCM, the forex.com, the capital.com, IDC. It basically shows you all the different sources. The one that you should choose whenever you are doing analysis on TradingView is O-ender, because that's the one that closely correlates with the prices on your broker. Okay, that's the one that correlates with the prices on your broker. So make sure that when you are charting using TradingView, you go with that specific source. Don't just select J. All right. It aligns with the broker. It aligns with the broker, which is the platform where you'll be entering your trades and making your money. Yeah, it won't be the same entry because remember that Cash Trap and O-ender or Cash Trap and Cash Trap and TradingView, it will not be the same price. It will not be the same price. That's why if you're charting using TradingView, you go with O-ender. All right, guys. Is there anyone that understands? Anyone that does not understand? That means the entry will be different. Yeah, the entry will be different. I guess this is why the educators will say, guys, go for 512 and below. You know, the below is them creating room just in case that, you know, prices are different. So that would be like your 512 and below. Coach Tony, there's no one that's basically responding on the chat box to say that they don't understand. So I'm assuming that they understand. I'm assuming that the repetition help people understand charting. Hello. Coach Tony?
Yes, I'm here. Thank you so much, Coach Ashla. Thank you, thank you, thank you. Guys, okay, I'm just quickly gonna run through a little things. Of course, you know we can't learn everything in one day, right? Coach Ashla, I've still need your screen.
Oh, okay,
Yes,
sorry.
please, I've seen it your screen. So I'll quickly explain something. I know this must be sounding very, very new to some people, like, oh, and but this is not how can be more used to say it, or this is not how this now. You need to understand something. In trading, there are different strategies, all right? There are concepts, there are principles that guide trading. For example, what Coach Ashla just showed you is something you call price action. All right, this is what you call price action. It's called break and retest. All right, it's simply when price breaks a particular support or resistance, it comes back to retest. Like guys, you can see this support resistance was talking about. Price broke it, all right, then came back to retest. All right, now it's still retesting it again. Okay, it's still retesting the same resistance. Now it's turning this resistance into a support. If you don't understand this now, don't worry, with time you're going to get it. But now guys, I'm going to show you how you can add this charting she just showed you in the daily time frame, in the hourly 1 hourly time frame, and in the 15 minutes time frame. How you can trade with it effectively on cash trap or your hourglass. Coach, can you just quickly refresh? Just refresh your page so the call arrows will update itself. All right. I hope it will not remove your markup. Go to EJ, let me see if your markup is still there. Boom, you removed our
No.
markup. Okay, so guys, I'm just gonna go with, okay.
But I can do it quickly for you.
Yes, I'm just gonna go with it. Now, guys, what are you looking for? Now, what Coach Ashton just taught is trading with you hear Coach you hear what's his name now, can remove saying things like trading strategy and trading technical. Now, what she just taught, what she just showed us is actually trading technicality of the market, the technical area of the market, okay? Now, what I'm going to show you next is how to trade with a strategy, okay? With a strategy. All right, now you must have heard of several strategies like the double blessing strategy. You've heard of cash trap. All right, you've heard of web slinger. You must have been hearing these names somewhere, somehow. Okay, so the strategy I'm going to be adapting, right, is the double blessing strategy. The double blessing strategy, okay? That's the strategy we're going to be adapting. So how does that work and what are we looking for? We are simply looking for, okay, I think I'll just need to break this down. We're looking in this strategy is called Hourglass. Coach, can you just open the strategies listed up there under strategies at the top? Now you can see there's a strategy called Hourglass and there's a strategy called Market Trap. Actually, the double blessing strategy uses the market trap more than the Hourglass. But personally, I love this Hourglass because of this momentum RSI. But let me just give you the basics, okay? On this strategy, what you are looking for, just to be aware, just to be on this currency. On this strategy, what you're looking for 4 greens for a buy and 4 reds for a sell. All right, 4 greens for a buy and 4 reds for a sell. 4 greens for a buy and 4 reds for a sell. What do I mean? Now we can see, first of all, you can, whenever you see this green line over here, whenever you see this line, this is the 200 EMA. It's telling you that this market is on an upward trend. It's telling you that the first currency, which is AUD, is stronger than JPY. If you go to your currency strength meter now, Coach Ashla, maybe just refresh. You'll see what I'm talking about. Refresh. I like refreshing this stuff. So can you see that AUD has 4 bars, JPY has 1 bar. That's why you see the market is pushing up, all right? So go back there. So whenever you see this same line is turning red or is red, you will know that the market is on a sell trend, which means it's going down. So now after charting, all right, right now a trade is actually setting up. What we're looking for is for price to come to, I'm believing if we should chart this trade right now, we should have something around this area. Okay, we should have something around this area. So what are we waiting for? We're waiting for price to come to this, what's it called now? To this support. And when it comes there, you see this arrow. You see this call arrow, we turn to number 4. All right, you want to take trades that are 4 and above. Okay, are you following me, guys? You want to take trades that are 4 and above on cash trap. You want to take trades that are 4 and above. So you see this call stuff turn to 4. That's 1. Then the support here will be 2. Then down here you have what you call the RSI and the stochastic. All right, what you want to see is price.
Coach, please come again.
Sorry.
Please, can you come again, like the markup, the first green, and I'm just seeing the second one. Let's see the first, please.
Coach Asha, can you just quickly chart chart this guy, so everything will be very clear.
I must chart this currency.
Yes.
Okay. Okay, so we're on the daily. It's a buy. Okay, previous candlestick is this blue one here. So I'm only going to chart the bottom. I chart the wick. I also chart the body. I take the time frame to 1 hour. Try to open it up so I can see the wicks of the previous candlestick. I go to the lines again, change it to yellow so I can determine the prices. And then I mark the wick of the hourly. I also mark the body of the hourly. On the hourly, I do it top and bottom. Okay, so I go to the top, I mark the body, and then I mark the wick on the hourly, and then I bring it down to 15 minutes. Okay, and then on the 15 minutes, okay, at least the wicks are very clear. I change my color on the 15 minutes to green. I do the same thing. I mark the wick of the previous candlestick, and then I mark the body. Okay, I also do what I did at the bottom at the top. I mark the body. I mark the wick. Okay, and then I go on to my 5 minute, which is where I'll be taking my trades. You can continue, Coach.
All right, thank you very much. So guys, can you see what I was talking about? All right. So you have, can you see that this 171 was a markup for AUD/JPY? So what are you doing? You're waiting for price to come to this markup, all right? Now, when price comes to this markup, that's 1 point. you are having this green arrow, that's 2 points. Price is at the green at the bottom, that's 3 points. And price is also at the green at the RSI, that's 4 points. So you can see green, 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 that's 4 greens. Guys, are you following? So 4 greens for a buy and 4 reds for a sell. So if this was a downtrend, what would we be looking for? We'll be looking for price to be at, let me clear this once.
4 reds.
Yes, 4 reds for a sell.
Mm.
So we'll be looking for price to be at the red at the top, red at the top. We'll look for it to be at another red on top that aligns. Can you see this? Can you see this markup up here?
Yes,
Can you see
yes.
the markup up here? And can you see that red line over there?
Yes.
Yes, sir.
Right? So you can see how price, now we didn't mark this one before, but you can see how the market follows a pattern. It is that pattern that we are looking at, we are charting up to give us extra confirmation. Okay. Now I love the call score and all of that, but I prefer and I trust more when you chart, you have more confidence to take your trades. Okay. So even if for any reason price breaks through your support or resistance, for example, you know, if price breaks through this 197 area, it's coming to this guy. You know, if it comes here, it must come down because you know this is a markup and it will play out. Are you following me?
Yes.
All right. So it's that simple. It's just that simple. So you do your markup, all right? You do your markup, you check your currency strength meter, you check the news to make sure that village people are not manipulating anything, all right? Then you come to your charts, mark up your daily, mark up your hourly, mark up your 15 minutes, all right? Are you following? Once you do those markup, what are you waiting for then? If it is an uptrend, you are waiting for 4 greens to take your buy. If it's a downtrend, you are waiting for 4 reds to take your sell. Are you with me?
Perfect, Yama.
Are you with me, guys?
Perfect, yes, sir.
Now watch this. These markups you're seeing here are potential entry prices. But guess what? Assuming, okay, right now, we're looking for, this is an uptrend, so we're looking for a buy, all right? This is my first place of entry, all right? So it's either I wait for price to come down so that this guy will be on the green and this guy will be on the green. Or if it goes up, what will I wait for? I'll wait for price to come back to these other entries and check, is he on the green? Is he on the green? If it goes higher, what would I do? I wait for price to come back down to this entry. And when the price is getting here, I'll check these guys. Is he on the green? Is he on the green? If yes, shoot. If it goes higher again, right? I'll wait for it to come back down to these guys. This is the double blessing strategy. If it comes back down to this line, either this first one or the second one, and this guy is on the green and this guy is on the green, my brother, take the trade. 3 minutes or 2 minutes, depending on the time of the day you're trading. Okay? Guys, are you following me? So it is just this simple, all right? Right here, you can see your currency strength. Already we are seeing, okay, we are doing AUDJPY. Can you scroll up to AUDJPY so we see the currency strength from here? I normally tell people that using Hourglass makes the work very, very easy. AUDJPY, no, on Hourglass, let's see the currency strength from Hourglass. It makes the work very easy, everything in one place. All right. Please explain the RSI and stochastic. This RSI, all right, this RSI and stochastic is simply showing you overbought and oversold, all right? When price or when the market is overbought in a particular direction, the next thing it will sell. When price is oversold, the next thing is it will buy. okay? So being an uptrend, you are looking for price to be oversold, which is when price comes down to the green line. When price is oversold, okay, what would you be looking for? Buy, because you know when it oversells, anything that comes go up will come down. When market goes down, it will come up. Are you following me? All right. When the market comes down, it will go back up. Okay. So you are when the price, this black line you are seeing is price line, okay, on the RSI and stochastic. They are technically doing the same thing, but I like it. The stochastic is usually faster than the RSI, but I like it when two of them align, especially the RSI. If I should remove one of these indicators, right, I would remove stochastic and wait for the RSI, because the RSI gives me more precise information of yes, this thing is oversold, or yes, this thing is overbought. How do you know when to trade 2 minutes and when to trade 3 minutes? Well, this question is I don't have a particular answer that suits this question, but from my personal experience, please guys take note when I say personal experience and when I say something is a general principle, right? From my personal experience, when the market has a lot of volume in it, that means the market is moving very, very fast, I'll recommend 2 minutes trade, and that's between the hours of 12 a.m. Nigerian time to 4 a.m. or when the London market is just opening. When the market is pretty fast, I recommend 2 minutes. Why? You can see how long this guy is taking to hit the resistance and come back down at this time of the day, okay? But if this market was a fast market, you see it will just move up. Next thing is coming down. It's moving really, really fast, okay? It's moving really, really fast. So, so far from what I've experienced so far, I like doing 2 minutes in a fast-moving market, then 3 minutes in a calm market, like my breakfast session, breakfast invest session in the morning. We do 3 minutes trades most of the time. Okay. So do we understand this market trap strategy? Do we understand?
Yes, sir. You understand?
Okay.
I do.
Coach, please, can you go to the other one, the hourglass strategy? I want to just quickly show something about there. So what is the difference between this hourglass strategy and the market trap strategy? I usually do fixed time off. I don't do fixed time on. Now, what's the difference between this guy and the former guy? The difference is simply this RSI over here. Okay, while the RSI on the other one is showing, while the RSI on the other one is showing us overbought and oversold, okay, while that one is showing overbought and oversold, this RSI is showing us momentum. What do I mean by that? If you observe, if you look at your chart very well, whenever price is above this middle black line, you can see that the market is on an upward momentum, which means it's pushing up. And whenever it goes below the black line, you can see that the market went down. Are you seeing it? Are you following me? So even in an uptrend, markets can decide to push down. So how do we use this indicator, this momentum RSI? What I normally do is, if I am in an uptrend trade, right, and I see that price is crossing this black line to the downside, it is telling me that the momentum of the market has changed and is going down. Not necessarily the trend, the momentum, okay? The momentum has changed. Like guys, you can see from here, you can see price was just going up. Now, normally, we would have been waiting to take a buy from this area, right? Because I can see a support over here. We're waiting to take a buy from here. But now I'm watching this trade coming down, and then I'm seeing it's crossing the RSI. When I see it has crossed this RSI, I don't go in for a buy. Oh, but AUD is still stronger than CHF. Doesn't matter. He's telling you, guy, the momentum has changed. And now, guys, watch this. Look at this. How many red candles? 1, 2, 3, 4, 5. Some persons would have rolled over before they will go in profit. You will roll. You will roll. Just know you have rolled. Okay, guys, look at this. It's happening here again. Can you see this? Crossing the RSI to the downside. So look at what happened here. Normally, this would have been a good place to take a trade. But watch this. It came and broke this support, and it crossed to the downside, which means momentum has changed. Will it go back up? Most likely. But when it's below the black line, right, sales will even be more favorable. But I would just advise, especially if you're a beginner, once it crosses this black line on an upward trend, just leave the trading. Go and look for something else. Guys, see, I'll wrap up with this because time is already fast spent and I need you guys to go and see. I'll wrap up with this. Don't trade like a trader. Trade as an investor. Okay, there are many of you here who you have the grace and the gift to just roll over. In fact, your rollover button is your best friend. Once traders go below your entry, roll over. You don't even roll over. You are just rolling over. See, you know what that simply means? You know what that simply means? It's like you invested money in somebody, in someone, and the next thing, the person squandered the money. And guess what? Instead of you to withdraw from that investment, say, come, let me give you some more money. Come, let me give you some more money. No. When you roll over in a trade that is failing its structure, you are investing more on that particular trade. The only reason you should roll over is when you know that, okay, maybe it broke this particular support, and there is another support that is just close by, and maybe you took an entry on this first one and you see it came down to the second one and it's staying there. Then you can roll over. Why? Because you know, right? It will still go back up. So you don't, in a place like this, you don't go for rollovers. You just let it go. You must learn to let losing trades go. You are not the one losing. It's the trade that lost. It's the currency that lost. They lost an opportunity for an investment. Guys, are you following me? So your mindset in trading is really, really important. Maybe one of the training sessions I'm going to talk about it. Sometimes I talk about mindset in the breakfast invest session, but this session is just for this purpose. And I'm going to stop here so that we can wrap up for the day. Do we have any other questions? So is stochastic not really important in Hourglass Strategy? This is stochastic in Hourglass Strategy, and this is RSI. So what they did, instead of having two indicators showing you overbought and oversold, what they did is one of the indicators is showing you overbought and oversold, and the other is showing you momentum. So in an upward trend, it should touch the black line, like it should touch the black line or the lower band. In an upward trend, right? In an upward trend, once the price comes to the green on the RSI and then it's crossing back up, then this guy is still above or on the black line. You are free to take the trade. But once it crosses below, like the way it's doing now, you're in a danger zone. Okay, so must we wait for the market to be oversold or overbought at all time, even if the RSI is on our side, before we take the trade? I recommend that you wait for the overbought and the oversold. That means on the red, on the green, not in between. There are other strategies that will allow you to take trades in between, like what Coach Ashla showed. It's a bit advanced for newbies, but it's a strategy. I know somebody learned something from that, okay? But for newbies, buying when market is overbought, oversold, and selling when market is overbought is the safest way for you to trade. You guys can see our results from breakfast in bed session. We hardly lose trades, okay? Not because we don't see opportunities, but we only take the safest trades possible using the double blessing strategy. All right? So that's it, guys.
Amazing, Coach Tony.
Okay.
No, we'll just take questions for now. This session was very, very informative, very, very amazing. And I think we have recorded this session so they can just go over it. But the interest must be more on learning. Once the interest is available, all these things, eventually you grasp them very easily.
All right. So guys, I don't want to take much time. There are a lot of things I want to share. I normally share it on my breakfast and bed sessions, but I think we have enough value for today. If you got some value from this session, let me see some of your appreciation. Let me see how you feel right now. If you've learned something, this is what I want you guys to do. I want you to go back to the chat group, to the Billionaires Club, Billionaires Traders, Billionaires Club. Go back to the group and drop, just in a sentence, put down what you learned from this session, okay? Put down what you learned. Don't say you learned a lot, please. Tell me, I learned that this. Whatever you know can help you improve your trade tomorrow morning, okay? Just put it down in the chat box. What you learned can also inform somebody to learn that same thing. So just put it down in the group chat box, and I will make this available for us to access, okay? So you can watch it all over again. Thank you, Coach Ashla, for the amazing session, and I hope to see you guys tomorrow at the breakfast in bed session. All right. Good night, everybody.